Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Mathew. And this show is geared towards your stock-related queries, be it a technical query or a fundamental one. Do write to us on the WhatsApp number that's flashing on your screen or on any of our social media channels and we'll get them answered by our guests. But before that, let's take a quick check of the markets. You have the Nifty 50 pretty much flat at this juncture, not doing too much, trading with a negative bias at this point. If you look at the broader markets, doing better than the benchmark. Nifty mid cap up about 1% in trade, while Nifty small cap up about 0.7% or 0.8% up in trade. Let's pull up the contributors of the Nifty 50. It's the heavyweights that are dragging the index, like RIL, that's down about 80 points. There's Kotak Mahindra Bank, Wipro, ITC that are all down in trade after not as great of results as they were expected. However, there's HDFC Bank, Infosys, Mahindra and Mahindra and NTPC that are in the green and are contributing positively to the index. Let's also look at the sectors. You have the Nifty Realty that's a drag today, FMCG, oil and gas, IT, all in the red. On the other hand, you have Nifty Healthcare Index, Pharma, Auto in the green. Healthcare and Pharma doing especially well, up over 1% in trade. Most of the stocks today are moving on the back of the results. There's Oberoi Realty that's up 4.5%. There's PVR Inox that's up 2% in trade, both on the back of their results, the first quarter results. However, there's a pack, which is the chemical and fertilizer pack, that's doing much better today. You pull up something like an RCF that's up 11% in trade. There's fertilizer and chemical Travancore that's up 8% in trade. There's Chemplast up 7% in trade. GSFC also up about 5.5% in trade. There's another pack, which is the defense pack, something like a Cochin Shipyard, that's also doing well in trade. Garden Reach also up. There's Cochin Shipyard about 4.5% in trade. So these are a couple of stocks that are doing well in trade today.
Absolutely, and it's all about the budget, right?
Yes.
Of course, the heavyweights have reported their earnings, and we were talking about it this morning. About a quarter of the Nifty 50 in terms of weightage reporting numbers for the first quarter post-market hours on Friday, and that's all playing out, as Smriti just pointed out, in the equity markets today. Let's get our experts on board then. We've got Avinash Gorakshakar, who's Director Research at Profit Mart Securities, and Rajesh Palvia, who's Senior Vice President, Technical and Derivatives Research at Axis Securities. Thank you so much to the both of you for joining us this morning. And like I said, it's all about the budget trade, right? So I'm curious first, and normally we go to our fundamental expert about a particular stock, but I want to go to you first, Rajesh, based on what you're seeing on the charts. And I'm sure that a lot of our viewers are going to be curious about how to trade derivatives ahead of this big event. Would you say that caution is advocated? Would you say that you should wait till the dust settles? How would you position yourself? And are there individual counters that you're looking at closely?
Good afternoon, Alex. Good afternoon, everyone. So we have already witnessed some volatility ahead of event. So most of the positions are, aligning themselves ahead of this big event. We have seen most of the mid-cap stocks have witnessed profit booking in last week itself. And Nifty also corrected from its recent high and almost tested a level of 24,400. Looking at the derivative data, the major put-based concentration for this Nifty is placed at around 24,400, 24,300. These two levels are very important and critical ahead of budget event. If it breaks below 24,300 on budget day or or prior to budget or post budget, then possible follow-up selling action we can witness, and then Nifty can go down further to 24,000 level. Even below also there is a possibility we can slip to below 24,000 level also. So 24,300 should be kept as a stop loss. Those who have already hold the position ahead of budget, if we break those level, then I think one should exit some of the trading position if it breaks below 24,300. Even for Bank Nifty, the major support area at this moment is placed at 51,800, 51,700. These two levels needs to watch closely ahead of budget. If he breaks those levels, then possible down move can extend to 51,200, even 51,000 for Bank Nifty also. On the higher side, the major supply zone is placed at 24,650 and 700 zone for Nifty. If we cross 24,700, then rally can extend to 25,000 also. So I think these levels needs to watch closely at this moment. To play this budget move, I think shorts triangle would be the only strategy where one can focus deep out of the money call put one can write. So 23,500 strike one can write and sell, and on the higher side 25,000 strike one can sell. These could be the possible trade setup one can deploy ahead of this budget event.
Fair point. All right. That's a derivative strategy that you should bear in mind. Avinash, a veteran of many, many budgets. And of course, over the long term, it's not like this particular week is going to govern anything from the perspective of a long-term portfolio building, right? But any opportunities that you see heading into the event, anything that you're buying today?
Yeah, good afternoon, Alex. See, first of all, we are advising most of our clients to be on the fence. I think the budget is tomorrow. I think it's better that we take a constructive call once the budget is out. We understand all the elements of the budget. But I think one clear theme which is likely to be coming in this budget is the rural India theme. I think one could expect a lot of announcements for the rural sector, because this is one sector which has actually suffered a lot. So I think you could look at fast-moving consumer goods. You could look at agrochemicals, fertilizers. Anything to do with rural India, companies which are largely supplying to the rural markets are obviously going to be key beneficiaries. And I think, investors should also note that there has been a lot of hype and expectation for sectors like defense, railways. I think here possibly one should not be surprised if some big announcements don't come out, because already a lot of announcements have already come in. So I think, rural India related, sectors and rural India related companies, Alex, could be better choices. And I think definitely, if, post the budget, as well as even if somebody wants to take a call today, one could definitely chip in. But I think one should take a longer term view, because budget is just one instrument. The longer term journey for the capital markets is not going to be governed by just one document. So I think tomorrow, let's wait and watch. But hopefully it should be a mix of both growth and populist budget, which I think the market has already, largely discounted.
All right. Yes, we'll be looking out for that. Avinash, let's start off with the queries. The first one is for you. This one's from Ramesh, who's writing in from Hyderabad. The counter they're talking about is Patel Engineering. The question is, should you buy at the current price? Now, we saw a little bit of weakness in the counter after the MD Rupen Patel passed away a couple of days ago. But from a fundamental standpoint, they're yet to come out with their first quarter numbers, but fourth quarter numbers seemed pretty good. There was a QIP, I remember, and they saw pretty good demand there as well. So from a fundamental standpoint, do you consider it a good buy at this point?
Yeah, I think my guess is, Patel Engineering is one of the market leaders in hydropower projects. And I think it already has an order book of close to about 19 to 20,000 crores. And the management has already given a commentary that in FY25, they are targeting for orders of 25,000 crores. Now, clearly, the payment cycle is long in this business, but typically there are very few companies which operate here. And the government is obviously going to promote hydropower as another element of power, source of power. So I think clearly, visibility is very strong. Plus, the management is very well rooted. They know exactly the business very well. And despite the fact that the managing director unfortunately passed away, it has got a very well laid down management team in place, which I think is confident enough of carrying on the projects in future also. So I think, if somebody were to buy now, one could look at a price target of roughly about 65, 70 within a time frame of at least 8 to 12 months. I think this sector is definitely going to see a lot of action. And Patel Engineering is one of the primary players. So I think from a longer term perspective, one can comfortably accumulate, but not with a short term view.
Okay, fair point. I'm coming back to you on another hydroelectric play, and we're talking about SJVN. We've got Johnny Martin from Dhanbad, who's bought 300 shares at levels of 128. And I'm just trying to pull up the chart and see where it's currently trading. 143 or thereabouts is where it is at. So he's in the green right now, but he's looking at a long-term perspective. Avinash, would you hold on to this?
Yeah, I think, if the investor has a 2-year view, Alex, I think hydropower in India is still a very small component, and these companies are extremely profitable. SGVN also made a offering OFS to large institutional investors, and now the stock is held by a lot of institutional as well as PMS and HNI kind of investors. So I think you have to give some time for this stock, because now the stock has multiplied significantly from double-digit levels, and I think now the journey will be purely based on the earnings and the order book kind of accretion. So prospects continue to be good. So I think if you have a 2-year view, I think you can continue to hold on. Prospects look pretty promising.
Right. The next counter is GMR Infra. The question is from Dr. Sanjeev Dikshit. They've been holding the counter from a price point of 35 rupees, Rajesh. A considerable profit there, and we've seen the price doubling in the last 1 year. Do you see this trajectory to continue? And if you can give us a target on this counter as well.
So, Smriti, GMR Infra is now trading near to its 50-day moving average. Looking at the short to medium term structure, stock is in bullish trajectory only. Though some consolidation is happening in the stock since last couple of weeks, but still looking at the short to medium term setup, we still hold our bullish view as the stock is holding about a breakout level of 88. So till stock is holding above 88 level, there is a possibility that, again, we may see a good up move in the stock in short-term perspective. Once stock crosses above 100 level, then there is a possibility of moving further higher to 115 to 120 also. So I think he may hold the position as stock is in process to form a rounding bottom formation on a monthly chart, which is long-term chart. So I think if he can hold for furthermore, couple of months, I think there is a potential of 120 to 125 level also.
Understood. Reliance Industries losing quite a bit of ground. Smriti pointed this out at the start. It's down about 3% and proving to be a bit of a weight on the benchmark right now. The question is coming from Vishakha, and she's wondering whether to buy it at the current market price, just about 3,000 rupees or thereabouts. Avinash, we're off the high point of the year. But if I look at the 1 year performance, it is still trading, if I'm not mistaken, about 800 rupees higher than it was at the low point. There we go. So it was trading at close to 2,200 or thereabouts at the low point over the last 12 months or so. Is this a good opportunity to buy, in your opinion? Because a lot of people have pointed out the possibility of value unlocking when we're talking about the listing of the retail business as well as the geo business. But the O2C business has been a bit of a disappointment.
Yeah, I think, Alex, if you take a slightly medium-term view over the next, say, 12 to 15 months, I think Reliance has definitely come to an attractive level. In fact, the first quarter numbers for Reliance have also been quite good. My sense is that the geo business is, getting scaled up quite strongly. The oil and gas business has also settled down very well, and the retail business continues to do well. So I think, now in the very near term, there could be no near-term triggers. But one thing is very clear, that the management is hopeful that by December, possibly there could be a value unlocking for the geo business. The retail business is again lined up. So I think clearly, Reliance should do well over the next couple of years. But I think, if one were to do an SIP even at the current odd level, one could definitely expect a decent upside from these levels. I think you need to have a little patience, because Reliance is one stock where, it moves pretty slowly, and you need to have a lot of conviction and patience to, make money in this counter. So I would say that you have a long-term view of at least 12 to 18 months, I think you can definitely start accumulating.
Avinash, coming back to you, the next counter is Raymond. The question is from Naman, who's writing in from Delhi. They want to buy Raymond at the current levels from a point of view of about 7 to 10 years. So a longer term perspective on this one, and now it's trading its lifestyle business. Do you think this is a good entry point into Raymond?
Yeah, I think Raymond has moved up significantly. And I think if one were to make a call on Raymond, I would suggest that it's better to do a small SIP here, because you could get the benefit of averaging. Finally, the lifestyle business is hyped up, but the real estate business and the core business continues to do very well. In fact, I believe the next 2 years are going to be extremely strong for the real estate business, and we are yet to see that get reflected into financial numbers. So I think despite the fact the stock having gone up, now the market is discounting, what kind of revenue and profit the real estate business will throw. Of course, the core business continues to do well. So I think somebody who has got a 2-year kind of time frame can definitely start accumulating, on a SIP kind of route, which can definitely give good returns. But please remember, this is a volatile stock, so you need to give in a time frame of at least 18 to 24 months.
Okay. All right, it's time for a quick break, but I just do want to point out the markets at this point. You have the benchmark that is more or less flat. It continues to be the case, but the small cap index is seeing quite a bit of action. It's up as much as 1% or thereabouts, and that has showcased itself in the advance decline ratio, and the market breadth has tilted in favor of the advances, very comfortably so. And that is a shift from what you saw at the start of the session. So let's see whether the market is getting some inkling of what could be announced in the budget tomorrow. We have to slip into a very quick break. We've got more on the other side, so do stay tuned. Hi, welcome back. You're watching Ask Profit, and we're in the midst of the query segment, or rather we're in the midst of taking all of your questions. By the way, if you've got questions for us, just a quick reminder, send it to us on the WhatsApp number that will soon flash on the bottom of the screen. The next question is from Yash, and he's writing in from Gurugram, and he's asking about Lux Industries. And we'll have to pull up the longer term charts because he bought quite a while back in 2021. His buy price is 3290 per share, which is elevated. The stock is still trading at around 1900 despite the kind of run that it's seen over the last 1 year or thereabouts. He's a long-term investor, and he says that time is not a constraint. What should he bear in mind? I know that he's looking at the long-term view, but I'm still curious about what Rajesh has to say about the charts. Rajesh, a recent move has been quite positive. It's looking strong. Is it looking good for the long term?
So stock has corrected significantly from its all-time high trajectory. Almost stock was trading at around 4,400, and all the way it has corrected to the level of 1,000 rupees, and then some recovery has been taken place in last couple of months. Though the stock is still in a bearish trajectory on the long-term chart, but yes, on the short-term structure, there is a recovery is taken place, and the stock managed to give breakout of almost 10 to 12-month consolidation range. So looking at the short-term structure, there is a possibility that we could see some more upside as the stock managed to give breakout above 1700 level. So 1700 is the important level at this juncture. If it continues to hold above 1700 level on a month-on-month basis, then there is a possibility that there could be a rally towards 2200 to 2400. That would be the next target where stock can move further higher. So Lux Industry, if you are still holding the position, your now stop loss should be at 1700. Possible near-term, short-term target would be around 2200 to 2400.
All right. Rajesh, the next counter is Jaiprakash Ventures, Jaiprakash Power Ventures. The question is from Ayush. They bought the counter at a price of 20 rupees. It's currently trading below that price. From a longer term, and it has given about 200% returns in the last 1 year. So it has grown very significantly in terms of price. What should somebody do who's still holding from such elevated levels?
So Smriti, stock has recovered and now it's consolidating since last couple of months in a range of 16 rupees to 20 rupees. That's the range which we are seeing in the consolidation. Though stock has already managed to give breakout of its short-term consolidation range. So we believe that till stock is holding above 16 level, there is a possibility that stock may attempt to again give breakout above 2021 level. If that happens, then possible target we can see towards 24 to 26 on the higher side. So I think he should follow now 16 rupees as a stop loss if he's still holding the position in JP Power.
Okay. Interesting question coming from Rohan. He's writing about NTPC and he's also asking about Avinash, the NTPC Green IPO, which is expected in the second half of the current financial year. Somewhere around November perhaps. If he's looking to play the power generation theme in India for the long term, would you suggest NTPC or would you suggest waiting for and investing in the IPO of NTPC Green?
I think my guess is NTPC could be a better choice because NTPC Green is keenly awaited, and we all know what has been the kind of what is the kind of response for most of the green and renewable energy company IPOs. So it's difficult to take a call whether he would be able to get allotment. But in case NTPC, gives some sort of allocation quota to, their shareholders to invest in this IPO, that could be a kind of bonanza. Of course, we don't know whether it will happen or whether it will not happen. But on the core business, NTPC continues to do well. Just buying, NTPC for the sake of NTPC Green would not be a good investment decision. So I think if his mind is only for NTPC Green, then I think it's better that he waits for the IPO. But otherwise, NTPC prima facie looks to be an interesting bet in the power generation space. And I think next couple of years, definitely a good, decent risk reward can come.
All right. Avinash, there's another question for you. This one's from Vishwanathan Nair, who's writing in from Cochin. Which is a better stock to buy, Jio Finance, Poonawalla or 5-star?
I think it all depends on what kind of time frame you have in mind. If you have the next 2 to 3 years, then I think Jio Finance looks better. Otherwise, the current momentum, if one wants to play the current momentum, then I think Poonawalla Finance looks quite ideally positioned. It has got a good mix of both SME as well as frontline kind of customers, and most importantly the book has been growing quite strongly. The asset quality has been maintained well. So I think if somebody has a 12 to 15 month horizon, Poonawalla Finance can definitely do well. We are expecting some rate cuts to happen, so that also could play some sort of benefit to the company. But from a next 2 to 3 year kind of time frame, any correction one should definitely accumulate Jio Finance, because I think this is one company where you're going to see a lot of disruption happening over the next say 2 to 3 years. So I think Jio Finance is slightly longer term, but Poonawalla Finance can fit the bill if somebody wants to take a 12 to 15 month time.
Okay, slightly longer term time frame on RVNL, and a lot has been said about the fundamentals of this particular counter. This is from Partha, and I'm going to come to you on this one, Rajesh. Would you suggest a fresh entry at 622 for the long term?
So overall structure is bullish. I think at 622, yes, he may add some quantity here. If in volatility, if you get further, downside opportunity in the stock towards 600 or 580, that would be again, attractive level to add more quantity. The way stock has holding the ground at higher level, we believe that, if it's not give any kind of, corrective move in volatility, then possible target towards 660 to 680 would be there in the short period of time. A very strong buying action in the stock has taken place in last couple of weeks. So we believe that, there is a high possibility that rally can extend. So at this juncture, he can add some position. Even in decline also, he may add. Your stop loss should be placed at around 570 rupees. And on the higher side, 660, 670 would be the next target.
All right. Thank you so much, Rajesh, for that. And thank you so much, Avinash, as well, for joining us on the show today. It was a pleasure having you both on the show. And viewers, thanks for tuning in. Do keep writing to us your questions and don't go anywhere. There's lots more lined up for you on NDTV Profit.
The case for a chat, for a conversation with JSW Energy is about the Q1 earnings. The profits have risen 84% YOY and EBITDA has seen an expansion, but also that they've received new LOIs for solar power projects. And of course, based on what they've done in terms of the capacity additions, the street believes that all of their targets could well be advanced. So lots to talk to Mr. Sharad Mahindra. He joins in right now. Mr. Mahindra, good having you. Thanks for joining in. Congrats on what seemed like a good quarter, though optically the revenue numbers were lower than the Bloomberg estimates, but very good operational performance, good capacity additions as expected, and good PAT performance. Is there a missing link in the quarter, maybe on the revenue side or maybe something else, or are you happy overall?
Thank you. In fact, the revenue, if you see, is primarily because in the thermal space. When we see the coal prices as compared to last year Q1 have moderated one, which is actually a pass-through, and also maybe a part of our thermal generation which moved to job work for our captive customer also resulted in. So revenue is basically any change in the coal prices is a pass-through, so it doesn't have any impact on the results.
Okay, so the fact that both Vijayanagar and Barmer plants saw the lower utilization, planned outage, did that have a bearing too? And of course, please do tell us if you believe that whether most of this would be made up as the year progresses.
Yes, if we talk of Barmer, wherein normally in Q1, when we go for the major maintenance of the plant, results in a lower PLF. But yes, we are absolutely confident that we will be achieving the desired PLF in the balance part of the year, and our whatever the deemed PLF of 80% will be achieved. As we are talking, our PLFs are in the range in the current month of July are in the range in excess of 90% in Barmer plant. So we are confident that we'll be achieving the desired and the targeted numbers of PLF in the balance part of the year. Wow. Regarding Vijayanagar, as you asked, Vijayanagar, if we see that there have been issues related to water availability, which resulted in lower operations. But yes, in early July, the water supplies have normalized. So we expect the PLF in Vijayanagar also going forward will be higher than what we have seen in Q1.
Got it. So this generation upticks that we've seen, net generation up 18%, renewable energy generation up 44%. You are running slightly ahead of what was anticipated. You reckon that would be the case for the rest of the year as well? Mr. Mahindra, part one is that. And part two on the capacity additions, because again, I think we had a conversation maybe 15, 20 days back when you were citing to this, but it's now been delivered in Q1. You think that's the run rate that you keep up for the rest of the year as well?
Yes. First, I'll come to in terms of the generation growth, which we have witnessed. If we see the demand growth, after witnessing a healthy demand growth in the country of 7.5% in last fiscal, current year Q1, the demand growth has been 11%, which is a very healthy power demand growth, which is primarily driven by, we see the growth, higher growth in the manufacturing sector, and also the extreme weather conditions, especially in northern part of the country, which witnessed 22% demand growth in Q1 as compared to last year. As compared to 11% country's demand growth, our generation growth has been 18%, which has been primarily driven by very, very good generation in the hydro energy space, where we have generation has grown by 61%. At country level, if we see, the hydro power generation has remained muted. But on the Satluj basin in Himachal, where our Karcham and Baspa plants are located, there the generation growth has been 38%, hydro power generation. With our better reliability and maintenance of the equipments and the availability, we have witnessed a growth of 61% generation on Satluj basin in our plants. Along with that, the new capacity additions of wind which we have commissioned during the quarter, and also the better machine availability of the existing assets in this quarter. These all with some merchant demand growth in the thermal sector. These are the prime factors which have resulted in 18%